Yes, on our show today, Finolex Industries reported a weakish set of numbers on the back of lower volumes in their PVC resin segment. We have with us Ajit Venkataraman, who is the CEO of the company, joining in to discuss their numbers in detail. Thanks a lot, Ajit, for joining in. You know, the revenue is down 28% this quarter, with the EBITDA declining by about 18%. Just wanted to know, with regards to the PVC resin segment, what really led to the decline in the EBIT there? Was it lack of demand, or was it because of pricing, or were you liquidating some inventory? How do things pan out from here?
So, good morning. Resin, we produced approximately 58,000 metric tons this quarter. And the volumes were a little bit lower because of issues surrounding supply of raw materials in the Middle East because of shutdowns in their facility. The PVC prices have been fairly stable, but a slightly declining trend over the last couple of months. And that has been reflected in the performance of the resin segment.
Okay, all right. Mr. Venkataraman, as you said, volumes were hit a little bit in Q4. But what's the way ahead? How is Q1 shaping up? If you could give us a sense in terms of demand. And also break it up for us, how much of the business is coming in from agri and non-agri or plumbing? Give us that breakup.
Sure. To give you an overall picture, we are coming in from a very strong volume trends from Q3 and Q4. For Q3, we had the highest volumes ever in plumbing and sanitation and the pipes and fitting segment. In Q4, we had approximately 81,000 metric tons of volume, which was fairly strong, coming from a strong Q3 as well. In terms of profitability, we have improved significantly, over 37% of profit improvement, which if you compare it with Q3 compared to Q4. And therefore, the volumes are strong, demand is strong, and we expect this strength to going forward as well in Q1. We expect the strength to continue. This is basically going to be on the back of good construction industry and a good growth in construction industry, and as well as agri demand. With the rainfall expected to be normal this year, we expect the agri demand to be normal as well. In terms of split between agri and non-agri segment, we are at a 65-35 ratio at this point of time.
65 is agri and 25 is non-agri. That's correct, right?
35 is non-agri.
35, right. As far as the normalized margins are concerned, the last time you joined us, you were looking at rupees 10 per kg in the pipes and fitting business. How has that trend panned out? And you said volumes would be good in the next year. How much would your volumes grow by?
So in terms of rupees per kg, if you actually see Q3, we were at about 5 rupees per kg. And this quarter, we have significantly improved it to about 11 rupees per kg. And in terms of this past financial year, FY23, we had the highest volume ever, 303,000 metric tons. And we had records both in terms of agri and the non-agri segment. We expect the non-agri segment to grow at a fairly good clip, about 15 to 20%. Whereas agri, we expect it to be a little bit more muted based on a very, very good numbers which we have seen in FY23. To expect the market to grow at the same rate is going to be difficult.
Okay, so from 303,000, what should the number look like by the end of the year?
See, it will be difficult to predict at this point of time, but we expect the industry to grow about 10 to 15%.
And you will outgrow the industry?
At this point of time, difficult to say, but I'll be able to comment on the industry trend, I believe.
Okay, just a quick word on the gross margins. They've come in much higher in Q4 in comparison to Q3. It's up by close to around, I think, 700 to 800 basis points. Any inventory gain?
No, it's essentially most of the inventory losses that happened in Q2 and a good portion of Q3 had an impact on the Q3 results. The PVC prices were much more stable in Q4, and as a result, you could see the difference.
Just a couple of questions with regards to the way forward. You have a plant in Pune which commenced, it has about 12,000 MT of capacity. By when does it utilize its capacity fully, and what's the peak revenue potential from this plant?
So we expect this state-of-the-art fitting factory was set up with, as you rightly said, 12,000 metric ton capacity per annum. And this we expect it to ramp up within 3 to 6 months.
And what is the peak revenue potential of this plant?
See, we normally don't split up the pipes and fittings segment revenues.
Okay. All right. Couple of quick questions before we let you go.
Sure.
Margins for the past year were obviously subdued for all the host of reasons that you've mentioned, at around mid-single digits. In the past, you've done much higher margins. Give and take everything, what is the band you're looking at in terms of margins for FY24?
See, it's a difficult question because it all depends upon how the PVC price movement takes place. At this point of time, we are seeing a fairly stable PVC prices at the moment. And the current rates are likely to continue if the PVC prices continue at this rate.
Could you explain what the spreads are right now and how have they been in the past for us to understand better? I think we've lost his audio. Please go ahead, sir.
You were giving us the spread, sir. PVC,
the
EDC.
PVC BCM spread is about 120 as of last week. And the PVC EDC spread is about 480. At these current rates, these have followed the PVC prices with a lag.
And what's the average comparable for this?
So on an average, we expect the PVC EDC spread to be around 550. And at this point of time, it is lower. And PVC BCM spread to be about 350. At this point of time, it's much lower.
That explains your margin compression. So let's see how that pans out going forward. Though we are running out of time, not out of questions, we hope to speak to you soon as well. Wish you good luck for the next year itself. 10 to 15% sort of industry growth is what you're anticipating with, let's see whether margins stabilize or not. As of now, the spreads are lower than what they usually were. And as a result of which, the stock down by about 3.5% as we speak.